kind of crazy, right? Like these big tech companies, Amazon, Microsoft, Google, they're pouring billions into AI infrastructure. And the market's, not exactly a sure thing right now. So it makes you wonder, are they geniuses or are they going to fall flat on their faces? Well, that's what we're going to look at in this deep dive today.
Yeah, it's a fascinating situation for sure.
Yeah, so to start, cloud computing is like, well, it's everywhere now. And these three, they're basically kings, right? But all this money they're spending, this CapEx stuff, it's making some investors nervous. So we need to figure out, is this a real risk or is this like a golden ticket that no one else is seeing?
Right, yeah.
So first things first, what is the public cloud? Imagine you could just get rid of all your IT problems. I mean, everything. Servers, databases, security, all of it. And these companies, they basically handle it all for you. And it's making them a ton of money. Like Google Cloud, they were losing, get this, 62% on every dollar. And now they're making a 17.5% profit. And Amazon Web Services, their margins are even better.
Wow, that's impressive.
Right. So then why are investors freaking out? Well, these companies just announced some huge spending increases. Google's saying they'll spend $75 billion in 2025. That's way more than anyone expected. Like analysts were thinking more like $58 billion. Then you got Microsoft, they're increasing their spending by 45%. But the real shocker, Amazon, they're planning to spend, get this, $108 billion in 2025. And they're spending in the last quarter of 2024. Well, if that keeps up, they'll hit over $100 billion this year.
Yeah, I can see why investors might be worried.
Yeah, so to understand that, I got to talk about something called free cash flow.
All right, free cash flow is basically the money a company has left over after they pay for everything they need to pay for, like their operations and any investments they're making.
Right.
So when you spend a lot on CapEx, well, that free cash flow goes down, at least in the short term. And that makes some investors nervous because it can, affect the company's value right now. But the really big question, the long-term question, is will these AI investments actually be profitable? I mean, will they make as much money as the cloud business?
Right, that's the billion-dollar question. But here's the thing. These companies, they don't seem worried at all. They're saying all this AI spending is because there's so much demand. Like, they know it's coming. They can predict it. Google even said, and I quote, "We exited the year with more demand than we had available capacity."
Interesting.
And Amazon's saying basically the same thing. Like, their internal data is telling them they've got way more customers than they can handle right now.
So that brings up a really important point about investing in general. When do you go all in and reinvest a huge chunk of your money? The answer is pretty simple. When you know you're going to get big returns. But when those returns are uncertain, then you got to be a lot more careful.
So basically it all comes down to how confident these companies are. If they're right about this demand, then this could be huge for their future.
Exactly. It's like the difference between, Netflix and AT&T.
Sure.
Netflix invested heavily in content, and that turned out to be, that was brilliant.
Yeah.
But then you have AT&T, they bought Warner Media, and, let's just say it wasn't their best move.
Ouch. So you mentioned you were interested in Booking Holdings, right? Well, Expedia, which is kind of like a mini Booking Holdings, they just released their earnings report, and it might give us a little preview of what to expect, Expedia had double-digit growth in everything, like room nights, bookings, revenue, you name it. And they're super positive about the future. They're saying bookings will keep growing. So, I don't know, maybe it's a good sign for Booking Holdings, too.
Yeah, could be.
Okay, so let's switch gears a bit and talk about Bill Ackman and his interesting investment in Uber.
Oh, yeah. What's he up to now?
Well, Ackman, he's had some big wins and some not so big wins. Like, he made a ton of money off Netflix early on, but then he sold all his shares way too soon and lost like $300 million.
Oof, that's gotta...
Yeah, but even with a few, missteps, he's still someone to watch. So anyway, he's saying he's always been a fan of Uber. And he thinks they're in great hands with the CEO, Dara Khosrowshahi. And he's convinced that the company's worth way more than what the market thinks. And he's promised to give a full analysis of his Uber investment soon. So we'll definitely cover that.
Oh, yeah, for sure.
So Uber's stock jumped about 10% when the news broke about Ackman's investment.
Interesting.
And it's up 21% so far this year. But before that, it was basically flat for a whole year. So it's not like some crazy out-of-nowhere spike. The point is, Uber as a company is in a much better place than, maybe their stock price from last year might show.
Yeah, I get it. So the numbers are telling a different story.
Exactly. So check this out. Uber's revenue grew by 20%. They've got 171 million active users every month. That's 14% more than last year. And get this, in the last 90 days, they did over 3 billion trips.
Wow, 3 billion.
Yeah, 3.07 billion to be exact. I mean, compare that to Waymo. They're doing like 150,000 trips per week.
Yeah, that's not even close.
Right. So Uber's price to earnings ratio is 30 right now. But it's actually shrinking because their earnings are expected to grow so much, and their free cash flow yield. It's basically the same as the S&P 500, but with way faster growth.
Okay, so it sounds like they're doing pretty well, but what about the elephant in the room? Robo-taxis. That has to be a concern for them.
Oh, yeah, for sure. But here's what CEO Dar Khosrowshahi had to say about that. He actually thinks self-driving cars he thinks they're both a threat and a huge opportunity. He said he thinks the U.S. robo-taxi market alone could be worth $1 trillion.
Wow, $1 trillion?
Yeah, but he also pointed out how massive Uber already is. They're doing like 33 million trips every single day. And he basically said, can robo-taxi companies even do that? Can they handle that kind of volume? And he's not even talking about the technology. There's all the regulations, safety stuff, and then just building enough self-driving cars and making them affordable. So what's his point? He basically thinks Uber is essential for robo-taxis to actually work on a large scale because they know how to predict demand, manage fleets, and deal with all the legal stuff.
So basically he's saying robo-taxi companies need Uber.
Exactly.
It's an interesting situation for sure.
Yeah.
You got Uber, they're huge, they've got a great network, and they seem to be trading at a pretty low price. So if they can figure out this whole robo-taxi thing, their stock could really take off.
Yeah, it's a gamble for sure. But a gamble with some potentially huge rewards. So it really does feel like these tech companies are going all in on AI, like it's their big bet for the future.
That's what makes it so interesting, right? We're talking about the giants, companies built on data and tech, and they're going all in on AI. It's like they're saying, this is it, this is the next big thing.
But let's be real, these companies aren't exactly known for making, reckless moves. They've got entire teams of really smart people analyzing everything, figuring out the risks, planning everything out. So what are they seeing that maybe we're missing?
Well, remember when Google said we ended the year with more demand than we had capacity? That wasn't just corporate talk. That was them saying, look, there's a huge demand for AI, and it's only going to grow. And Amazon saying the same thing.
So what kind of demand are we talking about here? Who needs all this AI power?
Well, think about it. Pretty much every industry, healthcare, finance, manufacturing, they're all looking for ways to use AI. They want to make things more efficient, get more insights from their data, and ultimately make more money. And who are they going to turn to? The companies with the infrastructure, the experience, the scale to deliver. Google, Amazon, Microsoft.
So it's like they're creating the demand by building the infrastructure, and then that fuels even more investment.
Exactly. And that's where the massive spending starts to make sense. They're not just building for what people need now. They're building for what they'll need tomorrow and the day after that. They're playing the long game, and they're going all in.
But there's got to be some risk, right?
Yeah.
What if AI doesn't become as big as they think? What if they build all this and no one uses it?
Oh, there's definitely risk. That's always part of trying something new, pushing boundaries. But they're not just throwing money around. These companies are making calculated bets based on what they know about the market and where technology is going.
It's like they're saying, we believe in this so much we're willing to risk it all.
Exactly. And that's what investors should pay attention to. Because if they're right and AI becomes the game changer everyone thinks it will, then the payoff could be huge.
So bringing this back to you, with your interest in Booking Holdings and maybe even Uber, what are the big takeaways from all of this?
The big takeaway is that we're at the beginning of something massive. AI isn't science fiction anymore. It's real, and it's changing everything. And the companies that control the infrastructure, the data, the talent, they're going to benefit the most.
So are you joining Bill Ackman on the Uber train?
I wouldn't call it the Uber train just yet, but Ackman's definitely got me thinking. I'm really interested to see what he finds when he releases his full analysis.
Well, you gotta admit, a guy who's willing to lose $300 million on Netflix might just see something the rest of us don't.
Or maybe he's just really smart and willing to take risks. Don't forget, he was right about Netflix at first. And even with some mistakes, his track record is still pretty impressive.
So what are you looking for with Uber? What would make you jump in?
I want to see how they're dealing with robo-taxis. That's the big question mark. Khosrowshahi's comments on the earnings call were interesting, but I need more. I want to know their plan, how they're going to stay on top when cars can drive themselves.
It's almost like a race, right? They're building this huge AI empire, but the ground is constantly shifting under them.
Exactly, and that's what makes this whole thing so fascinating. It's high stakes, it's fast-paced, and the players are some of the smartest people out there.
So what's next? Where do we go from here?
Well, the next step is to really dive into Ackman's Uber analysis when he releases it. And we need to keep an eye on those spending numbers. If they keep going up, it'll be interesting to see how the market reacts.
I'm definitely hooked. This is like a real-life thriller, billions of dollars at stake, the future of technology hanging in the balance.
And who knows? We might all be riding in robo-taxis sooner than we think. But until then, let's just see who comes out on top in this AI-powered world.
So you mentioned network effects earlier when you were talking about Uber. Could you explain what those are and why they're so important?
Sure. Network effects basically mean that a platform becomes more valuable the more people use it. Think about a social network. The more friends and family you have on there, the more useful it is to you. Same thing with Uber. More riders means more drivers, which means shorter wait times and better service, which attracts even more riders. It's a cycle that can really give a company a big advantage.
So for Uber, these network effects are a big part of why they're so dominant. They've got this massive network of drivers and riders that makes it really hard for anyone else to compete.
Exactly. And it's not just about size. Uber's network also gives them a ton of data, which they can use to figure out the best prices, the best routes, even predict demand. This data-driven approach is another reason why they're so tough to beat.
It's like they've built this incredible machine that's always learning and getting better, all thanks to the data from their network.
That's a great way to put it. And it's why investors like Bill Ackman are so bullish on Uber. They see a company with massive scale, powerful network effects, and a data-driven approach that's constantly evolving.
But even with all of that, they still have to figure out how to deal with the robotaxi revolution.
That's right. And that's why it's so important to understand how they're approaching this. Are they going to partner with robotaxi companies? Will they develop their own self-driving technology?
Those are all questions we'll have to think about as we continue to look into Uber. But before we get to that, I want to go back to something we talked about earlier, free cash flow. It's one of those concepts that can be a little tricky to understand.
Yeah, it can be. It might help to think about it like this. Imagine you're running Uber and you bring in $1 billion in revenue. That sounds amazing, but it doesn't mean you have $1 billion to just spend however you want. You've got to pay for all your operating expenses, things like salaries, rent, marketing, fuel costs. Let's say those expenses add up to $600 million. Now you've got $400 million left.
But that's not all, right?
Nope. You also have to factor in your capital expenditures, your CapEx. These are the investments you're making in the business, like buying new cars, upgrading your technology, expanding into new markets. Let's say your CapEx for the year is $200 million.
So you're down to $200 million now.
Exactly. And that $200 million is your free cash flow. That's the cash you have left to reinvest, pay dividends to shareholders, or just keep as a safety net.
So the more you spend on CapEx, the less free cash flow you have.
Right. And that's why investors can get a little nervous when companies announce big increases in CapEx. It means there's less free cash flow in the short term, which can impact a company's value.
But like we said before, those investments can really pay off in the long run if they're smart investments. It's a balancing act, weighing short-term concerns with long-term potential.
Exactly. And that's why it's so important to understand the company's strategy, why they're making those investments.
So what about the average person listening to this? How can they use this information to make better investment decisions?
The key is to understand how CapEx, free cash flow, and a company's growth potential all fit together. Don't just look at the CapEx number and freak out. Think about it. What are they investing in? Are these investments in areas that will drive future growth and profits? Does the company have a good track record of making smart investments? Are they confident about the returns they expect? If you ask those questions, you can start to form your own opinion about whether a company's CapEx spending is a good thing or a bad thing.
That's great advice. It's all about doing your research and understanding the story behind the numbers.
Absolutely. And there's no one-size-fits-all answer. Every company is different. Every investment is different.
Speaking of different, I want to switch gears again and talk about Expedia. We talked about their earnings release earlier, and I think it's worth taking a closer look at their results, especially since you're interested in Booking Holdings.
Yeah, absolutely. Expedia and Booking Holdings are both big players in the online travel world, so how they're doing can tell us a lot about how healthy that whole sector is.
Expedia reported double-digit growth across the board. Room nights booked, total bookings, revenue. It's a really impressive performance.
It is. And their positive outlook for the future suggests that travel is continuing to recover after the pandemic.
They're predicting bookings will grow between 4% and 6% in the next year. That's solid growth, especially considering the economy right now.
Right. And it tells us that people are still making travel a priority, even with inflation and worries about the economy.
So what does this tell us about Booking Holdings?
Well, we can't just assume Booking Holdings will do as well as Expedia. They're different companies with different ways of doing business in different markets. But Expedia's strong results do suggest that the travel market as a whole is doing well, which is good news for Booking Holdings.
So it's like a positive sign, a signal that the travel industry is in a good place.
Exactly. And it shows how important it is to look at industry trends and use data from similar companies to help us make investment decisions.
So we've covered a lot today, from cloud computing to AI, the ins and outs of free cash flow, and the dynamics of the travel industry. It's been quite a journey.
It really has. And I think it just shows how important it is to be curious, ask the right questions, and keep learning.
I couldn't agree more. But before we wrap things up, there's one more point I think is really important for anyone who's thinking about investing. So we've talked about crunching the numbers, looking at trends, doing your research, but there's another piece of the puzzle, and it might be the most important part, the human element.
You're so right. Numbers and data can tell you a lot, but it's not the whole story. You got to look at the people, the leaders making the calls, the vision driving those decisions.
Yeah, especially in these situations where companies are making these huge bets, these game-changing moves. It's not just about the spreadsheets. It's about gut feeling, that conviction that you're on the right track.
Think about the CEOs we talked about today. Amazon, Google, Microsoft, Uber. These are people with serious track records. They've shown they can handle tough challenges and make the big decisions.
Yeah, it's like they say, bet on the jockey, not the horse. Huh. Sure, the fundamentals are important, but the person at the top, that can make all the difference.
And in this case, we're talking about jockeys who aren't just good riders. They're visionaries. They're shaping the future of their industries. They're not just reacting to change. They're creating it.
And that brings us back to Bill Ackman and Uber. We've talked about the numbers, the market, the robotaxi thing, but really, Ackman's bet is a bet on Dara Khosrowshahi, Uber's CEO. He thinks Khosrowshahi is the guy who can take Uber to the next level.
Exactly. Ackman's done his homework. He's looked at the numbers, but ultimately it comes down to believing in Khosrowshahi.
It's a good reminder that investing isn't just a science, it's an art too. It's mixing the numbers with gut feeling, understanding that people matter a lot.
Couldn't agree more. We can spend all day staring at spreadsheets, but at the end of the day, we're investing in people. We're betting on them to make their vision a reality, to overcome challenges, to create something valuable.
So as you think about Uber, what are you looking for in Khosrowshahi? What would give you that confidence that he's the right guy to lead them?
Well, a few things come to mind. First, clarity of vision. Does he have a clear plan for Uber's future, especially with all this new technology popping up? Then, adaptability. Is he willing to change, to try new things, new business models? And of course, execution. Can he actually make it happen? Does he have a history of setting big goals and hitting them? And lastly, communication. Is he good at explaining his vision to his team, to investors, to the public? Is he honest about the challenges and opportunities ahead?
Yeah, it's not just about having a vision, it's about making it real, getting your team on board, and rolling with the punches as the world changes.
Exactly, and it's about making investors feel confident, convincing them that you're the right person at the helm.
So I think we've landed on something really important today. When we're looking at investments, we got to look past the numbers and think about the people. The leadership, the vision, the execution, those are all key ingredients in a company's success.
Totally agree. And it reminds us that investing isn't just about making money. It's about supporting the companies and leaders building the future we want to see.
Couldn't have said it better myself. And as always, keep exploring, keep digging, keep asking questions, never stop learning. The journey is just as important as the destination. Thanks for joining us on this deep dive. It's